Thanks for tuning into the trade setup. It's Thursday, very close to Friday, if you will. And PM Modi's visit in the US is consistently getting news flow. And we'll talk about that in a moment. First, the US markets, they didn't do as well. In fact, a 3-day losing streak now with the NASDAQ down about 1.21%, the S&P 500 down about 0.5%, Dow Jones a third of a percent. And this shouldn't be unanticipated simply because the US markets, much unlike Indian markets, by the way, have had a very narrow move up, and therefore the move down on the headline indices could very well happen at any point of time. It might actually be welcome as well for a lot of people. There has been a Bloomberg article, or there's been an article from a couple of people or brokerages in the global markets who say that the second half of the current calendar might well belong to the broader end of the spectrum in the US, and therefore remains to be seen if that were to happen or not. But net on the headline numbers, the US markets were down 3 days on a trot. Uh, the other cues are okay, no big changes there, but the news flow is interesting. So this is, of course, what the other cues are, and like I said, pretty okay. But the news flow is interesting. Stock futures flat after a 3-day losing streak, while oil has moved up and dollar has fallen on Fed chair's comments. And I haven't brought out Fed chair's comments because I didn't see anything different from what he already reiterated a few days ago in the policy. Goldman Sachs has raised Japanese stock targets on corporate reforms, and Japan, after 30% uptake YTD, still remains the principal large Asian market that people talk about. Sure enough, there is a Laos which has done well, much better than Japanese markets as well. But amongst the larger markets, Japan is right up there and continues to do well. But the global fund buying of Indian stocks also has hit nearly a 2-month high, which is maybe a positive. The SGX Nifty indicates a flattish start, maybe a marginally lower start. So we'll cut off about 0.25%. So no big surprise there. But keep in mind, I think the last few days we now know the template that unless anything changes dramatically, it is a market that is getting bought on dips. In fact, that's the trade setup for the day. The pattern of buying at lower levels with broader markets outperforming remained unchanged for fourth consecutive session. In fact, the broader markets have done well for 7 consecutive sessions. But that the Nifty goes down to about 16,600 or thereabouts or whatever, 18,600, 18,700, whatever the level may be, and that gets bought into has kind of remained unchanged. Smart money is cautioning though on the frenzy in small caps, especially where valuation captures FY24, 25 growth as well. A lot of people talk about those numbers. Tech, though, may see some upsides today as there are talks of easing visa rules which are emerging. The concern, though, to my mind now remains a monsoon. Thus far, people are talking about how it will recover, it will do well, but barish nahi hai. I hear that refrain from senior journalists in my newsroom and other newsrooms as well, who look at this every year. And now we kind of seeing that there is evidently a lack of monsoon. Can it recover? Sure, but can it do some damage to sentiment until it comes to the fore? Very likely. We started to see some chinks of that. FMCG was a bit soft in trade yesterday, maybe because of that, maybe due to other reasons, but I reckon some part of it also because of the delayed monsoon. There's some bit of profit booking that local dealers told me that people have started doing, keeping monsoon in mind. So bear that in mind. This is smart money telling me something which I thought I should bring to you. Anyway, so having said that, what are the stocks to monitor? Now, just before I get to the individual stocks, watch out for Zee Entertainment. I haven't given graphics for that. But aside of that, settling down or settling some case with SEBI for 7 lakh rupees, which I thought was a very small deal any which ways, the Economic Times today has put out a Q&A with Puneet Goenka, wherein he is apparently on record saying that independent of whether he becomes a CEO or doesn't remain a CEO, the merger with Sony will go through. Yesterday, the market was hit with twin announcements. Mint did a story about how Sony, 3 people in knowledge of the matter, okay, are saying that the merger will go through, and they have apparently knowledge of the matter of Sony's side. And then Reuters published a story of how Sony is saying that, we are watching all of this with keen interest. So there's so many WhatsApp forwards about how wrong WhatsApp forwards. I must tell you, there's a WhatsApp forward yesterday on so many groups. So many people sent the message to me about how, quoting Reuters, saying that, oh, this will happen, a prominent Indian industrialist will come over and take Zee, He's gotten the go-ahead from the highest levels. I really think that's bullshit. I don't think Reuters would file such a story in the first place. I haven't seen that story on the Reuters website in the second place. And therefore, uh, just be careful of all that circulating around this stock. It's become the talking point over the last few sessions. What I'm just telling you is that the two news flow that has happened, published, verified news flow, that Zee has settled a small case with SEBI, but it was only 7 lakh rupees. I don't think it's a material one. And two, there is a question and answer interview that I think the Economic Times has done today with Puneet Goenka. You might want to read that to get some cues. So just watch out for Zee. I, anyways, not in the business of predicting what a stock will do, but watch out for Zee Entertainment today. Keep an eye out for it and do read that interview for some further cues if you want to form your opinion. Okay, now to the stocks which are in news. Sansera Engineering, uh, large deal in the offing today. Shares are offered in the price range of 799.85 to 841.95, which is a discount of up to 5% to the current market price by these two sellers. This is as per the client terms seen by BQ Prime. So watch out for Sansera. Now, as per Bloomberg and media reports, delivery is the other one that could be in focus. Carlyle seeks about $86 million in a block trade where the floor price is set at about 385.5. The current price is about 388 or 389 or thereabouts. So watch out for delivery. May not have a sharp downtick today. In fact, if I'm not wrong, some brokerages have said that that stock has been rated a buy to. I'm forgetting which brokerage, but yes, there is a brokerage which has said that today. And as I said, the floor price is not very low from what the current price is. So be mindful of that. Then IT is in focus because, like I said, there is some talk in Reuters of visa rules might be eased in the US. So that brings the whole space in focus. But TCS and Wipro are in focus individually as well. TCS, UK's Nest Pension, and TCS have expanded a strategic partnership to provide enhanced user member experience. The deal will provide better retirement outcomes for 12 million Nest members. But TCS needed a bit of a leg up after an earlier partnership was called off. So this kind of brings that. Add to that the fact that IT is in focus today because of the conversation of easing visa rules. So that might make TCS a keen stock to watch out for. There's other, by the way, Morgan Stanley doesn't think so, and I'll get to that Morgan Stanley note. But before that, Wipro, the buyback beginning from today until the 29th of June. So watch out for Wipro. Expected acceptance ratio is of 10% as per select brokerages. The premium of the offer price of 445 is about 15.4% to the current market price of 385.5. So do watch out for Wipro as well. By the way, Morgan Stanley is coming with a note on IT, and they are saying much that the view they believe there's a risk to FY24 consensus estimates as greatest for Tech Mahindra, TCS, and Emphasis, and low for HCL Tech and LTIM within the large cap space. They've in fact downgraded Sign to an equal weight, the target price of 1500, following a strong outperformance. They maintain preference for large caps over mid caps. Morgan Stanley does. Their preferred picks are Infi, HCL Technologies, and LTIM. So much as TCS has positive news flow, MS believes that there's still downside risks to consensus estimates for TCS. So be mindful of that. Then Glenmark could be in news or is in news, could be a stock to watch. US FDA issued warning letter to Monroe facility in North Carolina. The company says, though, that they've done a voluntary recall of all its products from this facility in August 2021, nearly 2 years back. And the company says that it has not been commercializing any product from this site. And the company is also saying that the warning letter will have no impact on the existing revenues. Could there be a sentimental impact, though? A warning letter is a big thing. Let's see. Let's see. Maybe Glenmark reacts. So if it does, you know why. The company said that there's no revenue impact, but do watch out for Glenmark. Speaking of pharma, Lupin, the generic Spiriva approval, Jeffrey says underperformed, target price 660. They believe this, they're saying that the US approval for generic Spiriva is a positive, but it was widely anticipated. 18% and 75% of incremental EPS for 24-25 was anyways linked to this opportunity, and therefore it was kept in mind by brokerages, maybe by them. They say that the Spiriva is meaningful, but does not allay concerns on weakness in the core business, which is the tepid India growth and high SG&A costs. They say that stock trades at expensive valuations of 40 and 33 times FY24-25 ex Spiriva EPS estimated, and therefore Jeffries is not constructive. Kotak too, by the way, has a underperform rating which has come out this morning. So watch out for Lupin. Then some stocks to keep in mind, and look at the OI changes over the last 5 days for these stocks. So Shriram Finance, price change 24%, OI change 49%, seriously long build up. Metropolis 10% higher, 64% OI change. HDFC AFC 6% higher, 44% OI change. Then JK Cement went up 2.5% on some short covering, as did Deepak Nitrite, which is now up 6.2% in the last 5 days, with OI change of 15% out there. So some short covering seen in both JK Cement as well as Deepak Nitrite. So do watch out for these stocks. And Shriram Finance in particular, it was up and about in trade yesterday. Now Jefferies has come out with a note, and they have upgraded the stock to a buy with a very hefty target price. Like the current market price after the 11% uptick yesterday is 1732. Jefferies target price is 2130. They say it's an upgrade as sale of stakes by Piramal as TPG remove a key equity supply overhang that weighed on valuation. A favorable use CV outlook and growth in Shriram City Union Finance loan product should drive a 15% loan CAGR FY23 to 26. Despite slightly lower NIMs, they believe Shriram Finance will deliver a 16% EPS CAGR and 15% ROE over the period of 524 to 26. So do watch out for these names, or Shriram Finance at least in the session today. That is to be kept in mind. Lastly, viewers, there is a SEBI investigation into price manipulation into certain stocks. Now I'm bringing the order as is. All right, they're saying the investigation was conducted, of course, by, this is my statement, investigation conducted by SEBI into alleged manipulation of shares in 5 companies. The 5 companies are these: Maurya Udyog, 7NR Retail, Darjeeling Ropeway Company, GBL Industries, and Vishal Fabrics. Now, I checked on the BSE. 3 of these 5 have been suspended due to procedural reasons or otherwise. 2 are still trading in the equity markets. Now, SEBI's restrained 135 different entities from accessing securities market till further orders for alleged price manipulation in the shares of these 5 scripts. Now, everything else is okay. I'm not saying these companies were involved or which of these companies are involved. Maybe the companies are innocent per se, some of these. But the point is, the SEBI order also says that the ultimate beneficiaries of the scheme of price manipulation were identified as promoters of some of these companies. I do not know which are these companies. Maybe the SEBI order mentioned this lower bound, so please excuse me if I haven't gone all the way down. But it says that some of the promoters or promoters of some of these companies are ultimate beneficiaries. Now, therefore, independent of whether these companies, the ones that are trading, are involved or no, I think there will be a sentimental impact or an actual impact into prices of the 2 companies out of these 5 which are still trading. So be mindful of these. If you are, the larger point is, if you're trading on the back of SMSs that, hey, buy this stock, etc., because there's something that could be doing really well, please be careful. I mean, tips don't come for free, so just please be mindful of that. There could be ulterior motives. Okay, so that's the long and short of the trade setup today. There are some other stocks like BSE, for example, which might benefit. Jupiter Wagons might benefit due to separate news, and I think 8:30 show might cover some of these as well. Some queries. Please share views on telecom sector. Some very smart people tell me that if you, Anand Joshi, that the common refrain is that does it become a duopoly in long term? But hey, Vodafone is right here. They are still trying to battle it out. Maybe some fund infusion. Government still has 30% stake. Does it become as easy? Maybe no. When ARPUs go up, do these companies benefit? Yes. Are there other opportunities that people tell me? Yes. So the simple point, Anand, is that in the last 60 days, I haven't heard too many people talk about their interest in telecom stocks. You look at talking point for the last 30 days, out 60 days, I don't think anybody's spoken about telecom being the top sector bet. Maybe that tells you a story. I'm not an expert, by the way, on telecom, but I'm just telling you what experts tell us. In the last 60 days, I haven't heard anybody tell me anything about telecom. Maybe that's a bit of a dipstick that might help you. Update on Apollo Microsystems. I'm sorry, I'm not allowed to talk about specific stocks. Plus, I haven't looked at this business in a long time or ever per se. So I'm so sorry, Abhiram, but I don't have an idea about Apollo Microsystems. And update on Adani Enterprises and Ambuja Cement. Well, again, Kevin, I can't comment on specific stocks per se, but the recent news flow around cement as a sector from 2 or 3 brokerages was very positive. I've heard enough number of people on Talking Point talk about how they believe cement is a sector to play from a infrastructure perspective. So and this name plus Ultratech plus JK plus some of the others are often mentioned by people in brokerage notes. So I think the outlook on cement seems to be positive. So take that in account. Um, I have no idea about individually Ambuja Cement or Adani Enterprises, so you'll have to excuse me on that. But I'll tell you what, Kevin, on our shows at 11 a.m., maybe at 8:30, if not today, then tomorrow, some of our colleagues will try and cover some of these names. Maybe you can tune in for those. I hope this helps. Thank you so much for taking the time out and giving us and being with us on talking on trade setup today. Manpreet Gill, head of APAC Wealth at Standard Chartered, will be joining in on Talking Point at 10 a.m. today. I want to tune in for that. And like I said, some of the other conversations continue on BQ Run as is. Thanks so much for tuning into the trade setup.